Hi, welcome everyone to UOB Hyun CIO series number 38, AI's Asia Moment. My name is Chi Wong, CIO of Wealth Management at UOB Hyun. With me is Dan Kiang. Our guest speaker today is the CIO of Aqua Capital. Dan, you there?
Yes, I'm here.
Hi, welcome. It's very honored to have Dan again. He's an institutional client of ours. He ran a very successful Asia hedge fund strategy, and later I will ask him to share his latest thoughts on the Asia AI ecosystem. And just a reminder before we begin to keep following our research across US and China markets. We now offer a full suite of bilingual research for our wealth management clients. Of course, to couple with this research are events like this, which we had 3 already this month, I think, or in the last few weeks. We had 2 with our US tech lead, Garrick Lee, on the earnings season. And then last week, Dan and I had a similar event like this in Chinese. Obviously, today we're going to have more updated information for you. But back to our research, I just want to highlight that our US biweekly outlook today include not only the leading investor actions like Warren Buffett, Bill Ackman, or Ken Griffin. We are also increasingly tracking Donald Trump. President Trump is very important for short-term market signals, and a fellow named Jensen Huang, who runs NVIDIA, and he often comments on the AI industry. I think a lot of our investment ideas also generated from Jensen's comments. So we now offer tracking for both. And last not the least, our new US strategist, Wendy Chan, is leading this effort, help us to better cover the US market. And on AI, we also launched something called AI Heat Map. This is by Garrick. I mentioned earlier, we track some 20 plus AI subsectors, from memory to optics to power to foundry, you name it, and including around 100 US listed companies. And we have a daily email update to help us to find where the hot spots are, where the money is going, and what investors most care about. And with that, I think it's perfect timing to turn to our topic for today, and also our guest speaker from Aqua Lake. I'll let Dan to introduce Aqua Lake. But Dan and I've known each other for a long time. Like, as I said, he's institutional client of ours, and has a long track record and decades of experience in the global investment industry, and especially in Asia. Maybe, Dan, you can add on a bit on yourself and also your partner for your
Sure. Sure. Thank you, Chi. I'm always happy to be on the forum speaking with you, because it's a two-way street with us.
This is probably the 4th time you're on our call.
You have a lot of challenging questions, so
and you've made a lot of good, provided us with a lot of good ideas in the past. So we hope to get more ideas from you today. Go ahead.
Sure, absolutely. Look, just a very quick intro about myself. Before I started Aqua Lake Capital 3 years ago, I ran public equities for one of the large pension plans in the world, Ontario Teachers, here in Asia, where we ran across Asia, Japan, China, Korea, and Taiwan, as well as India and Southeast Asia. And I've been in the region for 25 years. I started my career with investment banking in Merrill Lynch, first in New York, and then starting in 2001 in Asia. But I soon spent all my time on the buy side, first with private equity, and then with the majority of my time on the public equity side. So we've seen a lot of cycles, very exciting times to be today. I actually, would be happy to talk about what sort of changed in the past week since
Yeah.
you and I have spoken. But in general, my fund is the Pan Asia fund, long short. So we try to make absolute returns, avoiding sort of large drawdowns, as we have seen in July, and we try to deliver teens type of returns to our investors. But we're very Pan Asia. We're very much focused on Asia as a region, and we don't touch too much U.S. stocks. We do follow them, but it's not sort of an area that we would invest in. Just to be clear in terms of our focus.
Yeah, and just for the audience, Dan's product has been onboarded with us in Hong Kong, Singapore, and also Malaysia, correct?
That's right. That's right.
Yeah.
We have investors through all these three regions.
Sure. And then his partner and him all together, you two probably had more than 50 years of experience added together.
Yes.
Is that right?
That's
Yeah,
right.
that's what I saw in the introductory materials. So today we're going to spend plenty of time talk about stock ideas, allow you to ask questions, and also give more time to Dan to talk about his strategy in this volatile markets. But let me start with a very general question. I think some background will help. Like you said, I think we need to give people an update about what's going on in Asia. We see a lot of volatility across Taiwan, Korea, and Japan. And I do want you to talk about this, which is the Korea's announcement of a sovereign. Can I say this is a sovereign AI project, right? It's a $500 billion sovereign-backed. And people often pay attention to Stargate, and also NVIDIA also launched another $600 billion of AI project with Wall Street. But people often forget about this Korea's AI investment. To me, it's a big number. Can you help us better understand what this is and what are the opportunities?
Sure. I mean, I think this is something that's really happening in our backyard. We think it's going to happen. Maybe not a bigger scale that what Korea announced for 500 billion, but it's very clear that the two leading companies in Korea, Samsung and SK Hynix, would stand to benefit. But one of the bigger things is that it's very clear why Korea is doing this. Korea, just for background, Korean government, along with SK Hynix, Samsung, as well as a number of other companies like Naver, basically announced that they were going to spend 500 billion and building up to what they call 10 gigawatts of AI data center capacity in Korea. The announcement came in a few months back, but we think that it's going to benefit a lot of Asian companies, especially in Korea, but also Japan, Taiwan, and some in China. The thesis is actually very simple: is that U.S., even Europe doesn't have as much computing power, and Korea is going to be the filler for that. Just to give you a sense, I think U.S. is probably looking to build, 10 to 20 gigawatts of AI data center, and each gigawatt roughly is about 50 billion. And so, if Korea's ambition is at 500 billion, that's at 10 gigawatts. That's a huge number, because in the past 3 to 5 years, or even up to 10 years, Korea probably hasn't even built, in the north of 1 gigawatt of capacity. So to give you a sense as to how bigger the scale that is.
Yes.
But we think this is a really exciting opportunity, especially for investors in Asia, just because it's going to significantly increase a number of the companies along the value chain for the AI equipment and hardware build out.
Sure. And I think you have a couple of ideas here. Maybe we can dive directly into some of the investable ideas along this opportunity.
Yeah. So I think, just a sort of a high level thing is that obviously NVIDIA's GPU is the sort of the power engine for running all the AI data centers. But along with that, you're going to have, as NVIDIA improves their capabilities, you have to have networking equipment that needs to improve. So something called optical, right? Traditionally, a lot of the transmission between servers, within chips are all using copper. But today, optical is replacing copper. So as a result, you're going to have huge amounts of optical related opportunities. So that's one area. The other area is obviously, related to all the electric power equipment, right? Because if you're going to power, up to 10 gigawatts, but let's even say 2 to 3 gigawatts, you're going to significantly increase sort of power equipment, as well as cooling, liquid cooling type of technology, because as the data centers gets bigger, they get hotter, and you need all these things surrounding it. And the reason that each gigawatt is 50 billion, it's not coming, it's not all going to NVIDIA. I would say probably at least 30-40% of that needs to go through all these parts of the value chain. And the only guys that's making those are the Chinese, the Koreans, and some Taiwanese and Japanese. There's no one else. I mean, there's a bit of coming out of Europe, but Asia is really stand to benefit, and it's unlikely, fortunately or unfortunately, for China to benefit from that, just because of the geopolitics that's going on.
Yeah. We hold the same view. I think, I mentioned we had similar events in the past, which are self-hosted. The key takeaway is really, I think the focus for AI investment, which should still be on the hardware side, on the hardware supply chain. I understand that, our focus is mainly on the US, but I understand you also have some interesting ideas out of Asia, in Korea. So maybe talk a little bit about I know when it comes to Korea, the first thing people think about memory. I'm sure I'm going to ask you about memory, but outside of memory, what are some of the things you're looking at?
Yeah, I mean, we can obviously jump to this particular company, but this is a company called Hansol Chem. It's a Korean company. They're actually, they're more of a chemical guys that you have to do special materials on top of PCB boards, on top of certain networking equipment, and they're must-haves, right? Because as you build more equipment, you need all these type of materials that goes with it. So their customers include TSMC, Samsung, SK Hynix, Micron, as well as CXMT. So if you believe, the thesis is very simple. If you believe all the other names I just named are continuing to going to grow because of the AI proliferation, then Hansol Chem is going to have to grow. We bought it a while back. This trades, I think it's gone up a little bit, but it still trades at teen type of PE with very clear visibility in terms of growth. And so, that's just one company that, we sort of picked out of a lot of other value chain companies.
I like that because you're not telling us to buy Samsung or Hynix, even though you may like those names. I'm sure I'll ask you in a second. But, I think part of your value add to us and also your strategy is really to help investor to find, right, those hard to find, under the radar kind of beneficiaries. Obviously, I never heard about this company before. You talked to me about it last week. Our Chinese event, you mentioned the stock. I checked the stock price just today. I think it looked like the price has gone up further since just a few days since our last conversation. So it is validating your thesis, and looks to me, without AI, it's just a cyclical company, right? There's nothing really exciting with this industry.
Right. But now
very
all
sleepy.
Sudden, But now all of a sudden you got a lot of demand coming in. So
it's a game changer.
It is.
Yeah. So I have to ask you about memory. So my top two question is, number one, whether this Korea investment, $500 billion, we know they may not come in at $500 billion, but it is still, it's not going to be 50 billion, right? So it's still a big number between that. And my first question is whether this initiative is really targeted also support its memory industry. And number two is, what's your thinking on the cyclicality of, I think one of the reasons people still pushing back these stocks and part of the volatility is because people keep thinking this is a very highly cyclical industry. Memory.
Yeah, I mean, let me answer your last question first. Because I think it's important to understand, the dynamics. I can tell you as a fact that SK Hynix,
Yeah.
Samsung, and Micron are the three memory makers. Their HBM4 is sold out up to 2027, maybe even 2028.
Yeah.
And the other statistic that I didn't mention last week because it sort of validated what we talked about is that the past few days, there's a hard disk company called SanDisk.
Yeah.
They came out with
Reported earnings, right?
Yeah, reported earnings. And not only the earnings were a beat, they basically said that they're basically tapped out up to 2030. Okay,
Wow.
now this is a hard disk.
Yeah.
And by the way, you know, I also recommend taking a look at Kioxia in Japan as
Yeah,
one of
yes.
the,
Yeah.
as a hard disk.
Same logic.
But same logic, but obviously when you have hard disk, you obviously have DRAMs, right? Because it's the memory is mainly divided between volatile, which is DRAMs, HBM, and non-volatile, which is hard disk storage. So, and they have to come in the same sort of level. And so as a result, you know, I think it's pretty clear that the demand is there. There is a black sheep, and that's CXMT, because there's two things about CXMT that people are worried, and that's why their IPO actually caused, you know, some of the sell-off in SK Hynix and Samsung. One is that obviously people not really sure when they're going to get to HBM4. They're already at HBM3, and they may get to HBM4 in another year or longer. So there's certain uncertainty. But the other is that people also are worried that being a Chinese player, you know, if I were to take BYD as an example, you know, volume matters more than margins, right? So they'll just keep producing, assuming they can, and that's obviously going to have a toll on the overall price and supply. So I think that's probably the black sheep that you have to sort of, or whatever, black swan actually, that you have to worry a bit in the memory market. But it's, in general, I think the demand is very clear. And, you know, frankly, you don't have that many suppliers. It's not like making computers. There's tons of guys, right? There's only 3 guys today.
Yeah, no new players except for the Chinese as a wild card. So that means, shall we be more careful heading to 2027? There's no immediate crisis, can we say that?
Yeah.
But I think the timing wise, I think people worry about memory prices peaking. Would that be somewhere around 2028 or late 2027? I just want to check out thinking with you if that's on the same page.
Yeah, I mean, I think most likely, but I think the market will see through it. Market today cares about what 2030 look like. I think the market knows that it's going to be tapped out, you know, 27, 28 for sure.
Yeah.
But you know, I think a lot of the price you can argue is already priced in. The market cares about what's going to happen in 2030, and I think SanDisk sent a strong signal, and that's why recently, in the past few days, there's been a big rally on AR hardware.
Well, they all got killed earlier because of the deleveraging and the macro top-down risks, but now seems like a very nice recovery since end of July. So to conclude, I think is it fair to say the Chinese will present a medium-term risk or at least some disruption, but the longer-term picture hasn't changed for memory.
Correct. I don't think so. Just because I think CXMT is still probably, you know, a year or years away in terms of on par with, you know, the top 3 memory makers on the, you know, the volatile side. Yeah.
So as a hedge fund, you're definitely not short memory. Are you long memory? Do you like memory?
We have Samsung recently.
Yeah.
We don't.
Did you buy recently the dip?
Yes, we did. We came back. We sold early July, but we came back.
Wow.
And we do have Kioxia for those of you, if you.
I see. So memory is still a good place to be in. And then you didn't answer my first question, is whether the Korean government has an intention to support the memory makers. But based on your description, look like they don't really need help. I mean, the fundamentals are strong enough. They don't really need the extra $500 billion investment to support their memory business.
So I want to be specific, you know, to the audience. There was 2 announcements. One is on the Korean government wanting to build AI data centers. And so obviously this is actually led by another company called Naver, which is kind of like the Tencent of Korea, but obviously significantly smaller. But they have data centers. So I think Naver will get some of the capex, but Samsung, SK Hynix, obviously will invest in Korea, but they will also invest outside of Korea as well. So they're also announcing big capex plans. So it's a bit different. But to your point, I think the Korean government definitely wants to build this because for them, Korea is in a very good place in terms of geopolitics because if the
Yes.
G7, G8 countries cannot buy from China,
Yeah.
the only place they can do is Korea.
Yep. And they have industrial capacity.
That's right.
Anything
and they're
from
cheap.
cheap electricity, anything from technology to defense. And we can talk about defense in a second. I think you have a defense idea out of Asia Pac. But I think Korea is definitely interesting in that sense as well.
That's right. Again, they're a benefactor from the geopolitics today.
Yeah. Okay, let's take a pause on Korea for a second. We can always go back to it. If anyone has any questions, we will have a Q&A session towards the end of this webcast today. And then I want to switch gear to one of our hot topics. This time last year, we predicted that the US-China AI race will be a big topic, and we've been right. There's a lot of things this year. I probably don't have to go through all of them, but I think the recent Manus acquisition was vetoed by the Chinese authorities, and the chip ban remains on China. And now we are heading to another episode where President Xi Jinping will visit the US, but also we don't know what will come out of it. And I would say AI will probably remain one of the focal points. What's your take on this topic? Recently, there's a lot of hype on Chinese models closing the gap, open source movement, and also whether you're taking any sides. I know you're not a US fund, so inevitably you have to invest in Asia. I would like to know where you see opportunity in this competition, strategic competition between the US and China.
Yeah, I mean the only side that we take is
the money.
So
yeah,
so
I guess
short the losers and long the winners.
Sure, regardless of country, right? There are losers and winners in each country. Can I say that?
Yeah. Of course. Yeah. I mean, I have investors in the U.S. and I have investors, in Asia. So, but
so
I think
it's not U.S. take it all kind of situation. We do see a lot of developments out of China that's surprising, even.
Yeah, very good. I mean, awesome in terms of technology, in terms of speed. Today, this is a daily news flow, but today, Alibaba Qianwen. Obviously, it's their main model, but they came out with a smaller model that apparently is just as good as the Zhipu GLM 5.3, which is Zhipu's latest model. Yeah. And this is incredible because you can put that small model into your private cloud. So large enterprises can do that with very little cost. And that's a huge development. And that's why Baba today is up 4%, 4 or 5%. Yep. So, but that race is ongoing on a daily basis. So I think to call who's going to win, very hard. But I think it actually makes this better, right? The more competition, the faster the growth of AI, and certainly the big benefactors are going to be the users, but also the hardware equipment. If you see the next, I have one China pick I have is Kindi Software. It sold off a little bit, but the whole thesis is that with the uptake of AI usage, the software makers, especially these embedded software, Kindi is an ERP software that's part of enterprises, right? So all the enterprises in China, instead of using Oracle or SAP, they use Kindi. That's the Chinese ERP.
Yep, native software. That's right.
And if you look at Kindi's positioning, they're in all the enterprises. They're benefiting from all the AI usage, and they can potentially use AI to charge more and to do more things. And so, and they're they're not very expensive. They're trading at 15 times price EV to EBIT. And we think that it's not a bad place to be if you wanted to play the China AI space. It's hard to predict which model, whether or not it's DeepSeek, Zhipu, or Minimax, or the new Kimi who's gonna win. But there's only one ERP company in China, and that's Kimi.
Yeah. And they can work with any model, right? They're
That's
not
right,
dependent on any particular model.
There's a concept, Chi, I know you know, but I think for the audience, it's called the harness model, right? Harness essentially refers to the seat on the horse, where the jockeys run. As long as harness is with the customer, which is a Kindi or a cloud player like Alibaba, you can switch horses, and the horses are the models, right? So that's sort of the concept in AI lingo today, where the value is.
Well, Kingdee is not a new company. I remember investing in this when I was CIO for a Chinese conglomerate. But back then, these software services companies in China were doing horribly because there was no AI, there was no driver, and enterprises didn't want to pay. But this company definitely has gone through some successful transformations. And kind of remind me what you talked about earlier about the chemical industry too. You could have a very sleepy cyclical industry, and suddenly AI comes in and it changed the whole game. So do you expect the AI to be a game changer as well for Chinese software and services industry, particularly this company?
Yeah, so I think yet to see, but I think this company, even if you buy it today at this valuation, it's still cheap enough, even if it's just going to grow on a regular basis.
Even without the AI boost, right?
Exactly. Now, if you have the AI boost, then obviously the upside is higher, and so we feel pretty comfortable. The other is also Alibaba, right? As much as Alibaba has two things: they got the model and they got the cloud, and everyone's going to have to use the cloud. So they're very well positioned.
I remember you said between Alibaba and Tencent, you prefer Alibaba at this point
today,
because of their leadership.
That's right. No,
this is not the first time we talk about Alibaba. I remember your first CIO series with us was 2023. You were pitching Alibaba when it's well below $100.
That's right.
And you were right. And we had a recording, by the way, so it's all on record. So I think stock has doubled since then at the peak. So at this level, you still like Alibaba?
We do. Our price target is probably about 150, and so not too far. 150 for the 9988 ticker, for the Hong Kong ticker. But we're not too far. But I think we feel very, you sleep probably a bit better at night, just because they're well positioned to benefit from AI.
Let me add one more question on Alibaba. I think some of our investors will want to know. We understand that Alibaba has leadership in cloud computing. In fact, the cloud computing growth is very impressive. I mean, in some cases, as like AI related, could be triple-digit growth. But the core e-commerce is going nowhere. Does that worry you? And what is the future? What does the future hold for that part of the business? Plus, this week we have the retail numbers are also very weak. The weak consumption and the weak macro will eventually weigh on the stock, right? Because it's still in the retail business.
Yeah, in addition to the overall e-commerce, the other thing that's Alibaba, I don't think they're in a bad position today, but they were when they had to fight with JD and Meituan on the food delivery, right? Because it's not so much the food delivery is growing, it's so much that you worry that they had to spend a lot of money to defend their market share. But that sort of has tapered off. So I think we got more comfortable that basically between JD and Meituan and Alibaba, they're not going to be fighting harder today. So I think the base case is that at least Baba is not going to lose money. I think e-commerce is not great, but I think if it's been already priced in. So I think with the cash, it's still a cash flow business for them.
Yes.
So if you can maintain that level, I think the valuation is justified.
Got it. Okay, let's talk about one more stock idea, and I also like to explore more on your strategy. Shall we talk about the defense idea that you picked?
Yeah, no, it's great because I think since last week, I think this company's up, another 5-10%. It's actually down today a
Wow.
bit.
Yeah.
But two
Australian
things.
company, by the way. Huh?
Yeah.
This is the first time I see
It's
it.
an Australian company. Also, it's sort of away from the geopolitics,
Mm,
right? It's going to be benefiting from that. But the thesis is very simple. This is an anti-drone. So this company essentially make a couple of things, but one big product they have is using lasers to shoot down drones. And if you look at what's happening in the Middle East today, um, essentially drone attack has been very popular. And I think a lot of the countries, Europe especially, sees those as potential threats to their defense. And
mm.
this is not a big company, so if they get a big order from a defense country like Poland or whatever, the stock will have a lot of upside. We
Mm.
did a lot of work to say that this company's um, capabilities is you know, it's unmatched in terms of their ability on laser and detection of drones,
Technology, right?
technology-wise.
The tech
So
mode. Mm.
yeah, and when it comes to defense spending, I don't think there is sort of a like, oh, you don't think about ROI or things like that. If
Yeah,
there's a threat, you're going to spend, right? And in
sure.
this company again is not. If you look at the backlog order and their revenues, they're not very big. So a small ticket of $100 million of defense order going to them is going to boost the stock price. And so, and especially what's happening in the Middle East today, it doesn't sound like this thing is going to be over soon. And we can talk a
Mm.
bit more about that as a risk on the macro side. But for sure, I think we're very comfortable with this company's technology. It's more about when they will get more orders from different countries.
Interesting. Well, you said it's kind of independent geopolitical risk, but I think this actually benefit from geopolitical risk.
Yeah,
Uh,
sure.
the Middle East tensions, and I remember U.S. versus Iran. This time they have spent hundreds of millions of dollars to stop the Iranian drone, which some speculate are made in China and cheap and abundant and destructive, while U.S. has to fight it with very expensive tech. And it looked like this company could help reduce the cost or have a
Yeah,
more effective solution.
that's right. That's right. Now, I want to say this also, in terms of as an investor, hopefully it could hedge you against war, right? Because if
Yes.
the war continues, but sometimes it would take a little bit of time to work it
Yeah.
out, just because defense budgets don't like change overnight, and so you might need
Yeah.
to have a little bit of patience with this particular name.
We like these long only hedges. It's not a short hedge, it's a long only hedge. And you're right, in the past, we've been advising people to use oil or oil stocks, but oil stocks are also very volatile. And the problem with oil as a geopolitical Middle East hedge, even though it's a really good hedge, from time to time, it may have this uh, demand destruction. In other words, oil price can go up, it can go up to 120, 130, and then when it hits high enough level, it's going to kill the demand and will cap the upside. So that's, I think, the drawback of using oil or oil stocks. That's my experience. So, but look like defense is an area that we should all do more work on. And to me, this is a long-term story, right? This is not just today
Yeah,
we have Iran, have Palestinian, and suddenly you buy this, but look like the world is heading to more chaos.
it is. It is.
Yeah.
Um,
And then just on the volatility in relation to a strategy, I want to ask you one last question on how you manage the volatility. In the past, you have given us a lot of good stock ideas. Some of them not that volatile, like HSBC, which has worked out wonderfully. Year to date, HSBC is still up 30%, even though valuation is becoming stretched. But other companies, I remember you talk about Chongqing Machinery, including the stocks you mentioned today, could be a small or mid cap, and especially memory sector. We talk about that, very volatile. So as a hedge fund, how do you manage that volatility?
yeah, a very good question. I think if I can get it right every time, then I'll be the best fund in the world. I don't
Yeah.
even think Citadel can get it
And
right
you
all
just
the
buy one stock, right?
time. Yeah.
Whatever the best performing stock.
Yeah.
Sure.
I think key is a couple of things. One is that, as much as we talk about AI, we keep our AI exposure to about 30%. We try not to be overweight or significantly overweight,
Sure.
just because a lot of things could happen. The second is that, to your point, we just have to have a bit of a diversified book. So today, I would tell you in our book, other than, the names that we talked about, Korea is
Yeah.
obviously big for us. China
Yeah.
is reasonably big for us.
Mhm.
We added Indonesia today. Okay, if you actually look at Indonesia, we're actually the country has come down a lot. They're down 45%. We have a name in the Philippines, and then obviously we have Australian names. So diversification across region, across sectors is a big way to help sort of making sure that you don't get large drawdowns. And
Yeah.
then the third thing is obviously hedging, right? So, for example, today, even though we have Korea single name positions, we have indices that help us, Korean indices that help us. But because we're a hedge fund and we're largest, a client for some of the banks, we're able to construct our own indices to short. So Korea, for
I see.
example, Samsung SK Hynix is 50% of the index. So we're
Yeah.
able to strip out Samsung SK Hynix and
Mm.
hedge the rest of the Korean names.
Like a basket.
And we,
Like a basket.
yeah,
Right?
like a basket.
Yeah.
And then we do that for a lot of the other hedges we do. Unfortunately, I think that as a retail, it's harder to have those
Yeah.
kind of exposures, but at least we're able to sort of manage that if there's a large drawdown.
Yeah. On our side, on our private wealth management side, we see a lot of structured product flows. Obviously, those products are specific targeting professional or accredited investors in certain regions. And I think if you are not running a hedge fund, if you don't have a hedge strategy, I think that's that can also to a certain extent reduce the volatility. So things like fixed coupon note or bullish, bearish products. And if anyone on call have any interest about these products, please give us a call or your representative a call about. We have a full range of these products at your disposal to help you manage the volatility. Like Dan said, sometimes you're absolutely right on something, but the volatility just kills you, and then you end up not able to hold it because sometimes it becomes so painful. I think managing the volatility of these positions will be critical to make money sustainably in these sectors.
Yeah, I mean, it's all about taking the right amount of risk, right? As a professional investor, basically.
Sure. And again, just to remind everyone, Dan's strategy, what is it called? It's called Aqua strategy, right?
That's right.
It's already on our platforms. If you're interested, please contact your representative. And our philosophy towards fund has always been the following. Number one, I think that regardless of the strategy, the transparency is always very important. So Dan here offers a monthly letter with top positions, sector exposure, performance figures, return attribution, so you can clearly see where the money come from, how he makes money. Number two is the access. Sometimes we don't just want to access the sales and marketing, but also directly the people who pull the trigger, like Dan, who is the CIO here. So as a CIO myself, I demand to access the CIO of a fund to have a more meaningful discussion. Otherwise, talking to a sales marketing person, most times is just selling products. And third is, of course, the performance and the volatility, we call the risk-adjusted returns. So Dan's fund seems to meet all three criteria. And number four is especially in markets where we lack access. So then I personally like your fund because of you operate in Korea, you operate in Japan, and those are the markets that we don't normally trade. It's not easy for us to trade. So I think, and based on our discussion today, including Korea's sovereign-backed AI project, there seems to be plenty of opportunities in those markets, not just China, not just Singapore or Hong Kong or Thailand. So I think this is a critical missing piece from our Asia allocation, and I strongly recommend eligible investor to consider to diversify into that particular space through funds. Okay, with that, let's turn to Q&A. We have about 20 minutes left. If you have any questions about today's topic, AI or Asia investments in general and Dan's strategy, please use the Q&A window to ask your questions. There should be a Q&A button or window somewhere on your screen. If you click it, and you can enter the question manually. So while we're queuing up for questions, Dan, we didn't talk about China too much today. China itself. We did talk about China AI. What's your take the overall the macro pictures? We have some pretty horrible numbers come out of the retail. I mean, the August number was just out, was another miss. As a foreign investor, I consider you a foreign investor, not an onshore Chinese investor. What's your take on that?
Yeah, I mean, it's not surprising, right? I think we've been talking about this for years, right? It's in general, with the real estate, with sort of structural, population, in general, it's obvious that demand overall is going to come down. And then you also have the government, which is very focused on technology in other areas, but less so on, in general, consumptions and some of the other sectors. Overall consumption is going to come down, so it's not surprising. That being said, I think there is clearly companies, certainly in the tech sector, but there's also other companies that are just very innovative. And China is a deep market, right? The A shares has 5,000 companies, Hong Kong, another couple thousand. So there's always going to be great opportunities. And now, in a way, it's a stock pick market for China. Obviously, last year there was a Laopu Gold and Laopu Huangjing and PopMart. But this year is a bit of AI, but there's always going to be exciting companies.
And the AI doesn't really need the economy to boom to work. In fact, I would say the a slowing economy may even be good for the technology because it help enterprises to save money and reduce costs and increase efficiency.
Yeah, that's right.
So there's a question on Korea, but I have a related question on China. So what is your China exposure right now?
So our China exposure is probably total exposure is probably, I say 25%. But it's pretty, market neutral. Like we have a couple shorts on that as well.
Yeah, and then the next question is on Korea. What is your Korea exposure? Because we did talk a lot about Korea today.
Yeah, Korea, we're probably about 30%. But we're a bit more net positive, meaning that our shorts are less than our longs.
Let me be clear. When you invest in Korea, 30%, you also hedge it with 30%, right? So net could be zero.
So when I say 30%, it's what they call gross exposure.
So gross exposure. I see.
About 20% on the long side and 10% short.
10% on the short side. Okay. And are you worried about the extreme leverage? I saw an article today saying that the deleveraging is almost over, but I have no way to judge this. I mean, this retail market just as crazy as China, in Korea.
It is. It's it comes down fast, but it can come back up fast as well.
Sure.
So, but I think in general, it's definitely better than the past few months. But to say it's gone, it's probably not true. I don't have any numbers to back up my claim, but I don't feel like there's leverage is all gone.
And your way of managing that risk is again using hedging, right?
Yeah. What we call baskets.
Yeah, and our recommended strategy to private wealth clients is really using structured products as much as possible, especially when stock crash. And when a stock crashes 30-40%, and in many cases it's not difficult for a memory stock to drop that much, right? Sometimes it could happen in a week. And then at that level, if you set another 70% strike or 80% strike, I think that's a pretty safe floor for a stock to drive to buy on dip when it's already down so much. And then the next question is on the U.S. hyperscaler raising money, so especially in debt to finance the AI expansion. Does it worry you?
Yeah, it definitely worries me. So there was a Bridgewater video. You can look at it YouTube by their CIO, and one of the charts showed OpenAI in the next 5 years how much it needs to raise, to sustain their level of operation. And I think you're looking at least a couple $100 billion. Okay, and this is OpenAI, right?
Yeah.
This is OpenAI, which doesn't have any cash flow. So that's a very, very big concern. Now, I think the most important thing, whether or not you believe or you don't believe, is that when is demand will continue to grow, which is probably true. I think you can take that assumption. But it's whether or not the pricing, whether or not Anthropic or OpenAI is able to sustain that level of pricing with the Chinese model coming behind their back and try to underprice them. So I think that's a very big if. But that being said, I will say both of them are trying to go public third quarter this year or fourth quarter this year. And so, I think it's a lot at stake for many people in Silicon Valley to keep this music going. And so, there might be geopolitics going on where people are not allowed to use Chinese models, right? So that to make sure that OpenAI and Anthropic can sustain that level of pricing.
It might be difficult to implement, but look like this is a direction under our theme of the U.S.-China AI race. But let me just add a few cents on that, which is, we've been writing about this phenomenon. It's not just the U.S. hyperscalers. I think there are many players now involved. Some private credit funds, equity funds are also involved in more data center expansions. So we've been writing about this in our Fixed Income Monthly for the last 3 to 4 months, targeting professional investors only. If you're a professional investor, please request a copy. So point one is that, yes, it is very significant. Goldman's data saying that AI-related debt financing accounted for 25%, close to 25% of new issuance in a single month. That's almost a quarter. And if you look at the sector now, accounts for somewhere around 20% of total debt in the market. It's not the highest for any single sector. I think telecom has gone up to beyond that scale in the past, but it is growing really fast. So eventually, I think it will become the highest single sector. And then I'm not sure you guys saw, and maybe Dan, you can comment this as well. I think what NVIDIA's Jensen Huang said about the GPU, he said AI investment is an investable asset, and then CoreWeave saying that the usable life of a GPU should be much longer than 5-7 years. They seem to sync each other, which is saying that these chips can eventually become collateral in debt financing because they have a longer life than accounting depreciation.
But it's hard to say, right?
It's hard to say because it's dependent on many different factors. It's like the shortage or whatever technological advancement today maybe dictate that these chips are more durable, but any change could make them irrelevant, right?
Yeah. I mean, it's Warren Buffett's favorite saying: if you're gonna go ask a barber if you need a haircut, most likely he's going to say yes. So the CoreWeave is singing their own music, right? Because, if their GPUs that they invested in is not going to last long, then no one's going to invest in them. So
exactly. But you can kind of see the Wall Street is increasingly adopting project financing based on GPUs and chips. In the past, data centers were only collateralized for their land, equipment, even cooling. But now if somehow makes this an investable asset, the chips itself become an investable asset, a collateral asset, then it will definitely expand the debt further. And also, like Dan said, it will increase the risk. So we're watching all this very closely. The ultimate question resides with whether the AI compute demand will remain strong. I think we're not seeing any slowdown. Are you seeing any slowdown in Asia or elsewhere?
No, definitely not.
Yeah.
I think one worry that people have, which I don't think should be a worry, is that, a lot of the things, once you start training it, you use less computing. But the
Sure.
reality is there's just so many things that, needs now can use AI. So you constantly come in with new type of demand. On even our investment business, right? There's always things that we want to try AI on. So I think that's pretty endless. I think, at least for now, that is.
Yeah. Do you think the Chinese will do the same? Use a lot of financing? I guess not. I think the China,
well, so two things. China is definitely a lot less financing, right? So requirements less. But I think especially with related to any of the semiconductor stuff, the government will easily back. The banks will for sure.
It's all kind of left hand to the right hand. So in China, it's all government backed. So it could be the state banks lending to state operators to invest in these things. And then what about here's an OpenAI question, which you don't really cover. Yes, the OpenAI valuation is ridiculous. The risk I see, Dan, I'm not sure you agree or not. I think there's an emerging crisis. Not crisis. Crisis is too strong a word. I think a problem. The problem is that neither OpenAI nor Anthropic, these are the two frontier model companies that both closed source. Yeah. Closed source frontier models are having a difficult time finding a viable business to justify their $1 trillion valuation. And they're not creating win-win, because I'm not sure you saw the Palantir CEO saying, Palantir CEO was implying that these model companies are stealing data from their customers and eventually will compete with the customers. Microsoft CEO kind of implied the same thing. And then suddenly the whole Silicon Valley, except for the model companies, are supporting open source. Even Jensen Huang is now become a vocal supporter of the open source, which is a different model than the closed source frontier models, right? Because frontier models kind of just establish so many enemies around the ecosystem. Do you feel that's still happening? Is that close to what you see?
Yeah, yes and no. But I think I think at least in the near future, I think the model guys will continue to dominate, right? Because
the two model companies, right?
Yeah, people need to use that. I think the problem with the data is probably true, but the reality is that these days data is just a part of it. Like, of course, you need the data to train and to do things, but it's the value that the data offers may not be as high as you think.
May not.
Like for example, I'll give you an example. Like, I don't know what's the best example, but for example, Workday. Now, Workday is HR. I've used it when I was at Ontario Teachers. I mean, it's good data, right? But when you have a new AI coming in, sure, the 10 years of Workday data might be worth something, but a lot of it's just forward looking. Like I don't necessarily need that 10 years of data to make a good HR software. So it's hard to say, honestly. I'm not sure. But one thing is I think is definitely true, is that there's going to be a lot of SaaS software companies that's going to be disrupted because of AI. And I think it's just who. I think that's a tougher call.
Yeah, not all companies will win. And then the next question is on, this is a good question on Korea, whether the Korean regulators do anything to curb the speculation. I think I saw some news out there try to limit, try to control the volatility. Do you think that'll be effective? What are the policies?
Actually, I don't know. I mean, there's certain policies on margin lending and things like that, but I think it's hard to. One is that to be clear, the Korean government wants to have a buoyant equity market, so I don't necessarily think that they want to suppress the equity market. So that the incentive is there not to have too much regulation. But yeah, I mean, I think Korea is a very cyclical market, right? So people get angry and they might do something, but then things might come back. So.
Yeah, as long as the long-term fundamentals intact. And we just argue that for memory sector, I think the fundamentals are solid. And that's evident in the earnings, evident in the channel checks, evident in many of the company comments. On China, yeah, this is a good question too. I think what this person referring to is really the regulatory risk. I think in the back of my mind, the regulatory risk for Chinese big tech is always there, regardless of what you do, and regardless of AI or not. So shall we factor this in to Alibaba, even though now it's kind of doing the things the government wants to do to develop AI to grow? But, how shall we view this regulatory risk?
Yeah. To me, the biggest regulatory risk is the inability for Chinese tech companies to be able to communicate to the world, with the world, right? I think
Can you say that again? That's really interesting. The inability to connect with the rest of the world, right?
The world, yeah. So, for example, I think the biggest thing is the inability to buy NVIDIA chips.
Yeah.
Right? Obviously, that's going to limit your computing capabilities, especially if you're looking at NVIDIA is coming out with their Vera Rubin chips, the next generation of chips. And apparently, it's going to be very, very highly efficient, faster, obviously.
Yeah.
That. And the other is, the whole Manus deal that sort of happened is difficult, especially if you're putting the shoes of a Chinese entrepreneur, right? Before you have, all the other Chinese entrepreneurs who's able to go back and forth between China and the US. But today, you can be rich, but I think the DeepSeek founder, I don't think he can travel too much, right? So
sure.
But it's not just on China, it's also the US. I don't necessarily think the US wants to sell China NVIDIA chips or whatever, whatnot. So I think it's not just coming from China, but if the US, if the two countries fight, obviously there's gonna be regulation that's gonna curtail the companies for sure.
Yeah, I think that could be. So the regulatory risk not just come from China, but also from the US. In that case, the US and China want the same thing. They both don't want the AI system to mingle and to talk to each other and to have too much connection with each other, right? That's kind of that's kind of the common goal, is to keep it separate.
Yeah, but they want each of them want to win the race, so they want to keep each other from now winning the race.
While winning the race, exactly. Yeah.
But
at least for the short term, are you aware of any regulatory risks on the big tech?
No,
like another crackdown on?
Not really. Not on the big tech companies. There's going to be capital control, for sure.
Yeah.
Right.
That's a separate discussion.
That's a separate discussion.
Yeah. Okay, look like there are no more questions. I want to thank everyone for participating, especially Dan, taking a valuable time to join us to help us understand the AI ecosystem in Asia. I understand you're traveling also, have to board a plane soon, so I'll let you go. Today's recording will be up in our Wealth Vision YouTube channel. Please access the replay if you want to listen it or any of your clients missed it. And we look forward to the next discussion next month. Thank you, everyone. Thank you, Dan.
Thank you, everyone.